Hello everyone, welcome back to the channel. Today we're going to take a closer look at one of the more talked about names in the artificial intelligence stock space, Bigbear.Ai, ticker symbol BBAI. This company has been popping up in investment discussions over the past year, and many investors want to know whether it could be a hidden gem or a risky bet in the crowded AI sector. Now, before we dive into the nitty-gritty details, let's set the stage. Bigbear.Ai is a data analytics company that leverages artificial intelligence to help organizations, particularly within the government sector, analyze vast amounts of information and make better decisions. As of September 19th, its market capitalization stood at around $2.5 billion. That puts it on the smaller end of the AI stock universe, especially when compared to giants like Palantir, NVIDIA, or even Microsoft, who are also heavily investing in AI. But being small hasn't stopped Bigbear.Ai from generating eye-catching returns. Over the past year, its stock delivered a staggering 334% return. And naturally, when investors see that kind of explosive growth, the next question becomes, what's next? Could we see a stock split? And more importantly, what are the chances that Bigbear.Ai can sustain this momentum? Let's start with the basics of stock splits. A forward stock split is the type most investors get excited about. It happens when a company decides to increase the number of its outstanding shares while reducing the share price proportionally. Imagine you own 10 shares of a company trading at $300 each. If that company declares a 3-for-1 stock split, your 10 shares would turn into 30 shares, and the price per share would drop from $300 to $100. Notice, though, that the overall value of your investment remains exactly the same. So, why do companies do this? Well, it's usually because the stock price has climbed so high that it starts scaring away potential new investors. A share price in the $1,000 range, for instance, may feel out of reach for the average investor. Splitting the stock makes it appear more affordable and can improve liquidity. Now let's apply that to Bigbear.Ai. With a stock price still trading under $10 and even its all-time high sitting at just $12.69, it's safe to say Bigbear.Ai is nowhere near needing a forward split. Simply put, the share price is already very accessible, so there's no real benefit in announcing one. But there's another type of split we need to talk about, the reverse stock split. And this one usually isn't good news. A reverse split reduces the number of shares in circulation and boosts the share price. Companies typically use this strategy when their stock price has fallen too low, often to avoid being delisted from major exchanges like the New York Stock Exchange. For example, the NYSE requires companies to maintain an average stock price of at least $1 over a 30-day trading period. And yes, Bigbear.Ai has been in that danger zone before. Back in December 2022, the stock touched an all-time low of just 63 cents, and for much of that year, it struggled to stay above the $2 mark. At that time, a reverse split may have been on the table. But fast forward to today, with the stock comfortably above those levels, a reverse split doesn't look necessary anymore, unless there's a major collapse in the business. So, with both forward and reverse splits looking unlikely, what should investors really be paying attention to with Bigbear.Ai? Well, the core of the story isn't about splits at all. It's about fundamentals. On the surface, Bigbear.Ai is in an exciting field. It's using artificial intelligence to deliver customized solutions, mainly to government clients. This naturally invites comparisons to Palantir Technologies, a company that has built a massive reputation in government and enterprise AI solutions. Palantir has been one of the standout winners of the AI revolution, posting incredible stock returns of more than 2,200% over the last 3 years. But here's where the comparison falls apart. Palantir is growing revenue at lightning speed, up 48% year over year to hit $1 billion in Q2 of 2025. Bigbear.Ai, meanwhile, reported a revenue decline of 18% year over year, bringing in just $32.5 million during the same period. That's a massive gap, not only in scale, but in direction. Margins tell a similar story. Palantir's gross profit margins sit at an enviable 81%, which signals strong efficiency and the ability to turn revenue into meaningful profits. Bigbear.Ai's gross margin? Just 25%. That low figure shows operational inefficiencies and raises real concerns about whether the company can scale profitably. So, while Bigbear.Ai might look attractive to investors chasing the next AI rocket ship, the reality is that its fundamentals simply don't support a sustained growth story right now. And remember, a stock split, whether forward or reverse, wouldn't fix any of these underlying problems. Splits only change the optics. not the actual financial performance. To summarize, Bigbear.ai has delivered jaw-dropping gains recently, and it certainly captures attention with its ties to artificial intelligence and government contracts. However, beneath the hype lies a much more complex picture. Revenue is declining, profit margins are thin, and competition in the AI space is only intensifying. Unless the company can significantly improve its financial performance, Bigbear.ai remains a risky bet compared to its larger, more proven peers. For investors, the takeaway is simple. Don't get distracted by the buzz around stock splits. Instead, keep your focus on the company's fundamentals, revenue growth, margins, and the ability to scale. Bigbear.ai has potential, but until those numbers start moving in the right direction, it's more of a speculative play than a reliable long-term investment. This is not financial advice.